Good morning, everyone. So the move from employment income to business income, or the move from employment income to retirement income, is a big hit for a lot of people because they are not aware or don't take into account the amount of taxes that have not been withheld on their pay. See, as an employee, your monthly tax remittances are done by your employer as part of your paycheck. That's the difference between gross and net. But when you retire, CPP, if you have any RIFs, any other pensions, usually those do not take off enough tax. So you are left with a hefty bill at the end of the year. And a lot of people get angry that they weren't told this information. So hopefully those people are seeing this video. If you know somebody in this situation, make sure you send them this video. The way that I like to explain to my clients is based on a percentage, what their tax rate actually was. And all that is taking their taxable income and making that divisible by their amount of taxes that they paid to show them what their actual tax rate was. Because it doesn't matter if their tax rate is 2%, if they end up paying, have to pay $2,000 in at the end of the year, they're not going to be happy. And I understand that because that comes as a shock to them. So for those people that are retired or just became retired, make sure that you were withholding enough tax on your retirement income. And I would say 20% would be a healthy percentage to start with. Of course, it always depends on your personal situation. But if you overpay, you will get that back, and it's a lot easier. It's a lot easier pill to swallow if you're getting a refund than it is if you actually have to pay. So now for the business people, your taxes are going to be higher if you've gone from employment income to business income. Someone who makes $100,000 in business income is going to pay somewhere around $26,000 in taxes. That's a lot of money, especially for those people that weren't planning on paying that much in taxes. It makes a huge difference. So if you're unsure, if you just started a business and you're unsure about how much taxes you could potentially have a bill for come next tax season, make sure you're talking to your accountant. It's important. You need to plan for that. I know even myself, years ago, I got caught in that trap. I did not save enough taxes. I didn't realize, this is 12 years ago, I didn't realize how much money I had made because I really wasn't paying attention. I just had my head down. I was working. I didn't do any tax planning for myself. So you're not alone. There are many people that don't tax plan properly. So go talk to somebody. Okay. So I hope that helps. Take care of yourself. Take care of your family. Take care of your friends. And be well.
Hey, thanks for watching. If you enjoyed this video, consider subscribing to our YouTube channel. You can also follow us on Facebook, Twitter, Instagram, and TikTok, all of which are linked in the description below. We're more than just an accounting firm. We do business consulting and media creation for our small businesses. Consider checking us out. It would really mean a lot. Hope to see you soon.